that. I think we're here. Everyone can see the screen and should be able to hear okay. Okay, good. Let's get started. So I thought what we would go over today is just really apply, core strategy to both the small time frames and big time frames, looking for opportunities not just in the FX markets but in some futures markets as well. Does that work for everyone? Kind of an application day. It's actually a good example coming up right now. If you want to take a look at it, we're looking at the S&P futures, by the way. We would watch this area right in here. It's literally just about a point above current price. Okay. Just a short-term income level. The challenge here, though, is remember what we're looking for always are fresh levels and nice big profit zones. And then when we find that profit zone, we want our profit to be something less than the profit zone. Does that make sense? So we can. And how many people are new to these sessions? Any new people to these sessions? Okay, welcome. Okay, good. So just in short, the strategy that we're employing here, we're looking at the charts to identify price levels where you have a supply and demand imbalance. In other words, where are banks buying and where are banks selling, so we can buy and sell there too. We're looking for the picture on the chart that represents that. And I started on the institution side of the business, so that's kind of where my training came from. What I'm sharing with you here is what that looks like on a price chart. What we don't do is anything around conventional technical analysis. So when you hear the word supply and demand, make sure you understand we're not interchanging them for the word support resistance or anything like that. I think you'll get it as we go along. But if you're new and you have some questions, you can always go back and watch some of the recordings. So we'll leave this S&P here for a minute. Oh, I forgot though. So look where it's at right now. You see how it's hovering around 2062, facing sideways here, and then potentially going up to this, say 63, 75 area to 64 or to 65. You'd want to see more of a very just clear profit zone here. But notice this wick to the downside. See that? This is kind of a clue that there's probably not a lot of demand down here at 62. Furthermore, price was, just a few minutes ago was down to 2059. Does that make sense? So what does that tell us about the demand side of the equation here in this area? Does it tell us there's, a lot of demand or unfilled orders or maybe not? What's your kind of conclusion there? Yeah, exactly. So, probably not a ton there. Okay, we'll come back to that. Now, I can look at any markets you want to look at. Kind of like a magic show, just pick a card. But or I've got a whole list here I can run through. So why don't we start doing that? And if you want to have a market you really want me to look at, just let me know. Sure, we can go to the euro. I went to the euro futures, but why don't we look at the euro spot? There's probably more people trading the euro spot here, so let's do that. We certainly can. Actually, you know what? Let's go. Let's stay here. Okay, so for those, been with us for a while, so we did get a little bit of a turn at that lower demand zone we were looking at last time. But now that we're rallying, remember this decline was made with some nice supply levels above. So let's look. So I'm starting with, we always want to start with the larger time frame. Just because we have some new people with us, let's really do that here. Okay. So if you look at the weekly gives us two or three areas, one somewhat close, the others not. So just a quick little peek there, and then we'll go over to the daily chart. Now I want to put a horizontal line right at the bottom of this, and I'm going to scroll left, not because that black line is demand, but more because I just need a reference point. So here that black line hits price again. Okay. So is this demand right here where we hit the black line? Remember, we're looking at the price action, the black line or lower. Is this demand right here? No. The first demand zone, right, comes in right here. Okay. And then we've got another level of demand below, actually, a better one. But that one comes in down here, right around 102.70. Okay? So in my mind, that's where the euro is likely headed. That's what the chart is telling us. Or actually, wait a second. 102, so what is that line? I just forgot to get rid of this level. Okay? So now, obviously, we're significantly above that. Yeah, this is a great level because it is the origin of the gap there. I see your post. Well, we have the gap right up here, about 103, and then the level is just below it. So now I'm going to scroll right. So that's where the chart is suggesting the euro is headed. The area we're just bouncing from does not appear to be a nice sustainable level. So knowing that there's room below, now we can go down to a smaller time frame and find some supply above to short against. That makes sense? Okay, so let's do that. This chart is wrong. Let me just fix this. Sorry about that. Here we go. So I'll start with this big one, and then we'll skip a bunch of time frames and go down. Here's probably the next area we're looking at, and we'll refine this down from here. Remember, I know it takes some time to plan out some of these big picture trades, but as you've seen over the years, a lot of them work out really, really well. So pretty much 107. So we've got we've got a potential play for the 107 area down to that. What was that? 102. Okay. Yeah. So when we say fresh, notice since this level was developed, and we really don't have much to the left of it. That's a key thing that we can talk about next time. But so price attempted to come back here, but didn't. Almost did, and then fell away pretty far, and now is attempting to come back there again, right? So now, by the way, what is that wick right here when price almost came back? What does that tell us about the supply level? Strong supply, weak supply. What does it tell us? Yeah, it tells us there's probably a lot of supply in that area. So I'd be looking to make a bet from the 107 area down to the 102. Okay, we're on a pretty big time frame. So if I come down a little bit smaller time frames, still looks okay. There doesn't appear to be a whole lot of really significant demand below. Now, what you want to be careful of is going down to the really small time frames. You're always going to find levels. So you may say, well, I'm not taking that 107 because there's some demand on a 5-minute chart. I wouldn't worry about that. Also, take a look. I am on a 5-minute chart. So when you look at current price and the rally since since 105.50, is there any significant demand in here jumping out at you? No, there's no fresh demand in there anyway, right? I'm already down to a pretty small time frame. So what I would even look to do here is find a even smaller time frame to short against. Oh, look what pops up right here. You see what I'm saying? You can see how it all kind of works out. So on the 2-minute, you just got some fresh supply that formed right here. And you do have a little fresh demand down here. And I'm going kind of very basic with you because I know there are some new members with us. And again, what we're looking to do is identify price levels where supply and demand are out of balance. Okay? In other words, where are banks buying and selling? Where are these significant unfilled orders on the price chart? Make sense? So let me just kind of circle these areas. Or we'll do this. One. We do have this rally base rally coming out of this drop base rally. There we go. Now we're looking at the spot market here too. I wouldn't trade the euro on a 2-minute chart in the spot market. I would only do that in the futures. Okay, so we'll put those levels in, but just be careful with that. Okay. I wouldn't trade such a small time frame in the spot market. I would only do that in the futures. All right, let's look at a different market. Anybody have a different market they want to look at? Yeah, and I have a whole giant list here. The DAX, sure. DAX had some great levels this morning. Did you trade you guys trade the DAX this morning? Okay, so here's our level that we kind of planned out a few minutes ago, right? That area. Anybody take this trade, by the way? Looks like it paid a few points here. You got that, Walker? Okay. So you can see, again, that's the picture that represents where banks, institutions are selling the S&P. Again, not a big, huge, level, but, it's on a small time frame. It's an actionable level. And remember, though, the reason why we said it was okay was because of the lack of demand below. All right, profit zone. And again, we'll see what this does. It looks like it's already paid about 3-to-1. Now, remember, we weren't that scared of this level right here because of this wick to the downside. Remember, I asked you. I said, what does this wick do? Does it tell us there's a lot of demand there, or is it weak? You said weak, and you were right. So we'll leave this alone for right now. Let's go over to the DAX. Here's the DAX. Yeah, this is a great market. Now, for those that are new to this, don't just jump in and start trading the DAX. This is a pretty big price point and lower volume futures market. So be careful. In the big picture, let's actually just play with this chart here. Okay, let me start with the little bit bigger time frame. So just, we're looking at a 30-minute chart. I can make it a 60-minute chart, whatever. Just looking at this time frame, what does the supply-demand equation look like here? Do we see a lot of supply, close to current price? Do we see a lot of demand close to current price? And I would say the answer to both here is no on this time frame anyway. So let's go to a smaller time frame. And when I say no, I mean, we've got all this stuff right here, but we've already been down here. So whatever buy orders are sitting there unfilled, many of them have been filled thanks to the very recent price action. So let's go down to a smaller time frame and investigate these red candles above and these green candles below and see if we can find some institution demand in there. Okay, here we go. So now we see when we look below current price, we do have a little demand that comes in down here. And again, no significant supply just above. So I'm going to go down one more, scrunch the chart up a little bit. There we go. Okay, so looking at this time frame, I really wouldn't do, I'm going to go down a couple more time frames here. Let's just do that now. So watch this area right here in the DAX. Hang on. Okay. So we do have a couple levels that are of interest right now. Okay. We've got this little area that the DAX is trading in now. The only problem with this area right here, it's not fresh, but it's just one odds enhancer. It is a pretty important one though. So put this little level in here. Okay. So we'll leave that. The nice thing though is there's really not a whole lot sitting below current price. Yeah, there's lots of buy and sell orders, in a market all the time. What we're looking for are these significant buy and sell orders. Where are banks and institutions buying and selling? That's really what we're interested in. And on the demand side, we're really looking at these levels below. So I've got a couple areas right here and right here. Okay. Here we go. A couple levels sitting on top of each other. We'd be interested buyers down here. Now we'd have to, assess the profit zone. Notice I'm going a little bit wider than normal with the DAX. It's because of the volume issue. I'm used to trading the DAX. So we'd raise this one up just a touch here. Okay, to get those prices right. All right. Obviously, the fresher level is up in this area right up here. Obviously, this one has a much more significant profit zone. It's fresh, and it's higher on the curve. So that's another area, but we're not close to that now, so we'll leave that one alone. Okay, let's move on to another market. Is there another market? Gold, sure. Love looking at gold. Okay, let's take a look at gold. Okay, there's gold. Now, let me get this time frame up here. So again, always start with the big picture. Okay, so in the big picture, here are the levels we've been looking at in gold. For those of you who've been with us for a while, we've been bearish gold for more than 2 years now, and that's because of all the significant supply above and the lack of demand until about the 1,000 price point down here. We continue to be bearish. It'll be nice when we finally get down there. I didn't think it would take 2 years or 2.5 years, but we're getting there. Sorry about the timing. But there's definitely a lot of people that have been hurting gold, buying it, the last 2-3 years. And again, the lack of demand in this rally, couple that with the presence of pretty significant supply over the last couple of years or so, it's pretty clear that the market was going to fall. So it's been falling, and so we want to short. We want to continue to short rallies. So let's look at Let's go to the smaller time frames here. Okay, and let's see if we can find some supply to short against. All right, Millen, I don't see why we can't do that. Here's the 4-hour chart of gold. Too big. Let me pull this one down. What is the DAX doing here? It looks like it's... Is that right? All right, so it is falling from that level. If you did short at that area, again, you've got just a lack of demand until quite a bit lower. Again, just be careful if you're newer to trading the DAX. You got a decent little profit going so far, but again, this one can really move. So let's go back to gold. Here we go. Let's bring this to a 60-minute chart. Again, the point in gold is here's some old levels. The big profit zone is on the downside, right? And so we want to look for supply levels to short against. The problem right now is, if you miss the last rally into supply, you don't really have a significant supply level that's close to this one here. What's nice about this one is you have a little bit of supply sitting just before it. So, I'd be okay with this one. In the larger time frame, though, probably the safer bet is a little bit higher up in here. And you can see it pretty clear on this chart right here. Let me just go to this one. Okay. This market's just fall. Okay. Yeah, focus. This one is more the what you're pointing out there. But inside here, if you want to reduce the risk a little bit, because that's kind of a wide zone on a larger time frame, just go down to a smaller time frame and look for a small rally-based drop inside that. That makes sense. Okay. Let's go to another market here. I can go to again any market you like. Yeah, Raj, we looked at the euro already. We spent quite a bit of time on that. Yeah, we're on oil right now. I read your mind. It's back to that magic. No, I'm just kidding. But here's oil. So everybody keeps saying buy energy and oil's got to go higher from here. But again, if you look at the charts, that's not exactly what they're suggesting. Let me take you to, let's go here. Let's go scroll left. Again, not because that black line is support or demand, but because we need a reference point. So we want to see where that black line hits price again. And it's right here. And if you remember, last time we got together, the demand that we're looking at is really down in here. Okay, so there's that. Walker, yeah, it's not that I don't like the trend. I love the trend. The trend is just all the word trend means is price is moving, right? That's what trend means. Prices are moving in one direction. Well, yeah, you can't make money trading or buying and selling anything if you buy when prices are moving up or sell when prices are moving down, right? That's way too high risk and low reward and all that. So, but I love the trend because the trend is where we get paid. By entering at fresh supply and demand levels, what happens there is you're going to be, you'll be in the trend before it's well underway, and then of course out of the trend, at or slightly before it's over. That's the whole plan there. Okay, so oil continuing to fall. Well, I'm sorry, I forgot to, let's see what price that's at. It's not that much lower. So this is the same level we went over last time we were together. It's the 38.50. So I wouldn't be at all surprised if prices went there. So given that that's where it looks like there is some significant demand that can cause a nice rally, and we're much higher than that right now, right? Let's look for some supply. Yeah, and if you're in a downtrend and there's still room below to the fresh demand level, Alexander, just look for a fresh supply level above to short against. So the challenge here, though, is going to be finding fresh supply. There is, but finding it close to current price. On a 5-minute chart, well, let's start a little bit bigger. Okay, so I really wouldn't be interested in shorting oil unless it rallied up to the 45 mark, which we're really far from that at the moment. And I would take a nice big level like this. You've got a kind of almost a gap there with it. I'd put a stop above this whole area. All right, so not a whole lot to do here until you get a rally. Okay. Yeah, we've got some great shorts in crude oil. That level's already retested. It doesn't look like it's retested here, almost, but again, there's that clue. That's kind of another odds enhancer, right? Price almost comes to the level and can't, again, because you've got so much supply right there. All right, let's try to get in a couple more markets here. Oh, you short from 47.50. Yeah, that was a great area. Really nice supply there. Oh, that was the little area. Yeah, I got that. So here we go. We'll take a look at the spot. I'll try to mix it up here a little bit for you. Okay, so not a ton to look at here. Let's go to the larger time frame for a moment. You can see we're up into these prior highs, and yeah, you kind of have this lack of demand below. Well, you do have that, but you also don't have the presence of any significant fresh supply. So I'd be watching Canada for some supply to develop or form. With these little pivot lows here, you could get a little bit of basing here. In other words, if the Canadian based here for a little bit and then fell, you'd have some supply up here to short against for a move potentially down to certainly coming back down to this area here. So that'd give you a nice little profit zone. Yeah, the correlations are certainly there. The ones everybody knows about, but I can tell you, so I've been at this for a little over 20 years now, and what I've learned in that time, and remember, I started on the futures side of the business at the Chicago Mercantile Exchange, which is where tons and tons of hedging by major corporations, governments, banks, and companies, goes on or went on. And so well aware of all the correlations and things like that. My big point, I guess, is what I've learned over time, chart each market separately. And I really don't focus much on the correlations. You've got the kind of the obvious ones that have to happen just because of but in some of the others, like, for example, stocks up and bonds down, yeah, sometimes, not all the time. If you focus on the levels, you don't need to even worry about that correlation. You know what I mean? So I would just make it easy on yourself and just focus, chart the market separately. And look, if you do find, for example, the equities and the bond markets in opposing fresh supply demand zones at the same time, great. That's a pretty high probability event. But just because one is hitting one level and turning doesn't mean the other one is. And I would say that goes for just about any market. I've just found you're always going to be safer, doing it and looking at it that way. Okay. I saw someone mention our little S&P trade here. I have no idea what this thing. Let's see what this thing's doing here. We're on a 5-minute chart, right? Or a 2-minute. Nope, that's the wrong. That's not the right S&P symbol. Okay, we had a nice little. So you had a nice little move, and it went through here. It looks like it paid you about 2-3 to 1, and then turned. Okay. Now, why bet on the downside in the equity index markets? I'll show you. Yeah, George, that's what I would do. I mean, that is what I do. The point of betting, continuing to bet on the downside in equity index futures or markets is some of these old lines. If you look below current price, and I'm already on just a 5-minute chart here, look at when we kind of take an X-ray snapshot and analyze this rally, you really don't have any significant demand and we're looking at 55 NASDAQ points here. That's pretty big. Okay, obviously, as I go up the time frames, okay, the picture's only going to get worse. So again, for about 55 points, you don't really have any significant demand below current price. It's not to say we're into this amazing supply zone, but this lack of demand, where we're at on the curve, the fact that we spent so much time down here already before this, tells you it could be back down there, pretty quick. Okay, on our DAX, let's see, what did this DAX do? Probably the same thing, right? Anytime we look at the DAX, I'm always going to give you a warning just because, see, there you go. So we had a little supply zone there. Again, it wasn't 100% fresh, but, the area it's turning. So depending on where your stop is and everything else. Again, these markets are likely to head down to here, just not a lot of fantastic supply. So, right direction. And let's see. Yep, we can look at the pound yen. Great levels here, obviously. Big picture. So I'm not sure what you're looking for. But if you look at these larger time frames, okay, once you get it up above the, once you get above 180 into the 180, 50 area, you've just got supply after supply, some really nice levels there. Again, this market's going to be, similar to the others. There's just larger time frame lack of demand until you get down to the 174 area, maybe 174.50. Okay. So like some of the others, right here where current prices, just like gold and oil, a lot of these are in the middle of these areas. So. Okay. If you get out, you want to get out of these recent ranges and out to the extremes a little bit. What's nice is when you break out at these ranges, let's say you break out to the upside. Well, that will be right into supply where banks are selling this market. Just like in crude oil, if we break out to the downside, well, that'll be right into demand where some institutions are buying it, and that's really why it works so well. And some people say, well, that's contrarian. Well, it's only contrarian because the retail public does the opposite of what they should do. So people call it contrarian. Does that make sense? Believe me, a bank or institution doesn't call it contrarian at all. That's how they make their money every day, every week, every month. Let's go back and look at some other markets. Go back to the futures here. Yen, really nothing to look at here. Just moving sideways. Let's go to one of these two markets. Big rally in the bond markets. Let's see if the 30-year, that's just up a ton. Again, I wrote an article I think a couple months ago about some of these bigger markets. Crude oil, everybody's, a couple months ago, and even now, people are saying, oh, you got to buy energy. Crude oil's got to go up. And everyone is absolutely sure that interest rates are going higher this year. Be careful with those thoughts. That's not what the charts are suggesting at all. Okay. I know it feels like they should, but the charts aren't suggesting that. Charts are actually suggesting the opposite. Okay. Yeah, interest rates obviously down quite a bit today. So we put a horizontal line in here and scroll left. You'll see when we hit price, oops, let me get some more data. Actually, let's look at the weekly chart. Oh, we're looking at the 30-year. I'm sorry. I thought we were looking at the 10-year. Let's go over to the 10-year. That's where we have our level. So, this will fill a gap pretty quick here. So let's see if there's any supply just on the other side of that gap. What we're looking for is inside this area right here. Go 30-minute. Okay. So we've almost filled that gap, not quite. You do have this whole area here. I would, I'd watch for that. A lot of people will just short the gap and put their stop just on the other side of it. So what you'd be betting on with this type of short is that you'd be shorting the buy stops, right? A lot of people are going to sell short just below when the gap is filled. That's what a lot of people do. They're going to put their buy stop just above. So I would imagine, I would guess that there's going to be, quite a few retail buy stops up in the supply zone that I've kind of drawn out for you here. So it's a very likely scenario. Does that make sense? Remember, when you get this right, you're trading like an institution. That's the whole goal of this. You want to, you're shorting the buy stop, selling the buy stops, buying the sell stops, just like a bank or institution. If that makes sense. All right, I just saw we're about out of time here. So there's my email address, sseiden@tradingacademy.com. If you have any questions, again, I try to be pretty basic here today to get everybody on the same page with core strategy. If you have any questions or comments, certainly send me an email. Happy to help if I can. And have a great day, everybody. Thanks again.